Hello friends, this is a second video in the series of candlestick and chart patterns, and the candlestick pattern is it's not only for any specific currency pair or any specific asset. It can be traded for it can be used for stock trading, crypto trading, or the forex trading. So earlier we talked about the hammer candlestick pattern, and today we'll talk about inverted hammer, right? So inverted hammer is the opposite of candlestick pattern, the hammer candle. It has a tiny body and it has the long upper wick in place, rather the downside, and the inverted hammer candle has a tiny or no lower shadow. Okay, this candle indicates the market likely to uptrend after the downtrend, as we can see here. See guys, the market, this was the uptrend from here, and then this candle from here, this is the inverted hammer candle. Right after this, market went upside. So you will place a buy order right after closing this candle. The next candle opens up right here, somewhere around here. That would be kind of aggressive trading, and your stop loss would be somewhere around here, okay, below of this candle. Or if you have any, if there is any support, major support or resistance, you can place a stop loss according to that. In my own experience, as per my own experience guys, I have observed that you will find this setup, the inverted hammer candle, rarely, but it's good to know information. Okay, in the coming videos we'll talk about rest candlestick patterns. Some of them are very very like they found frequently and very powerful. So we'll talk about them in the next video.